Good afternoon traders, it's Simon at Kairos Capital Markets with the weekly and monthly review of Aussie dollar, pound yen and euro dollar. So again we're going to start with the Australian dollar on the monthly chart. So overall I've not really gone into much detail this chart for you because you only do it every so often, but here we are now. So what I notice is this is we've moved down significantly from the highs of 2011. And what I see now, we're grinding back up. We are very slowly to some form of value. Now, we highlighted 80 before as a value area, and I still think 80 is a value area at the moment, but we just need to see a bit more evidence to it. On the volume at the bottom here, what we do have is very low volume on this pullback. So this pullback isn't really being created via interest of institutional investors. It's more the retail sector, smaller investors just chopping money around, nothing too much there. The volume is below average as well. I know this candle, this green candle here, is slightly above average, but when you look at where the institutional investors started selling from, they haven't actually bought their positions back that much. So myself personally, I would say we're still in a bear trend, and this doesn't surprise me. Now, when we pop down to the weekly chart, which is here. Now, last week, if you remember, I outlined that because the volume was picking up here at the bottom and the candles were getting bigger and bigger, I didn't want to short this pair at all. I wanted to have a wait to see what actually happens. I did say on the 4-hour chart, a break and retest of the 4-hour 50 EMA would be your perfect trade opportunity. That did actually happen precisely to how I expected it to happen, but I never took that trade. I had other trades on I was looking at anyway, plus obviously, as you know, I was away last week, so I wasn't really at the computer. So what I see now is this, is the volume's even higher and the candle's massive. So this bearish engulfing candle on the weekly is a confirmed bearish engulfing candle. It's not done by market makers to trap you. It's where the institutional traders have actually started to start selling at around this level again here. Now, if you do remember rightly, last week I did outline and say, although we got a high test here, I wouldn't want to sell it. You are trying to pick the top, and I have a natural tendency to actually kind of pick in tops. And this candle here was the top of the chart. As although I didn't want to take it, like I said, it as unconfirmed. I did say that, like this, this because it's a high test doesn't mean it's the top, but it's quite likely, I suppose. But either way, so if you notice that the 4-hour 50 had been respected very nicely all the way through this chart, and as you can see here, we broke down, come back up, just kissed the 4-hour 50, then rallied back off it again. Notice as well how we've actually closed down a very bearish engulfing candle above average volume as well. So that is a good close as well. That is, it's not a close where people go, oh no, it's a fake bearish engulfing candle, it will pop back up. No, that's a good trending bearish close there. So for me, it is bearish. And let's go back to the daily chart now, confirm that again. So here's my level of 80. I just stuck that in as 80 as just a generalized area. Here's your upward sloping trend line. Again, you can see this on the 4-hour chart beautifully. And what's happened here is the interest here has been above average all the way through now this whole entire week, except for a couple of days here. But Wednesday and Friday was really interesting here. Good bearish engulfing candle close again here on the daily. Good high volume. I like that. I'm now looking for value to enter. Okay, guys. And for me personally, I think this will be more around about the 80 level. And if we go back to the 4-hour chart and we'll see what we've got here, we'll just pot in 80 there. You can see how 80 is respected a couple of times. The 4-hour 50 is dipping down. And if you just do the very highest, the very lows there on the Fibonacci, the 382 levels there as well. So I like that a lot. I think that's really good area to enter. Now, if you look at the volume on the side, volume at price on the side, you'll see that the actual area is actually 805 is the key area there. So if we do grind back through this, you want to make sure you stop above 805 clearly, just purely because that's where, if it does slice through, it may test 805 again. It's a wait and see type scenario. The more we zoom out, you can see the more interest here, and we're now actually entering a high interest area. So the fact that this 805 is there, I'll definitely put my stop above that if we get the order there. And I'll give you an example of that trade. So something like this. This is what I'll be looking at, something like that there. And you can target the 77 area. It's a 3.5% trade there. That's what I'll be looking for, something like that. The reason why we target the 77 area is when we come back to the weekly chart, we can see 77.5, for example, is where the weekly 50 is. You could target a little bit lower, I suppose, really, if you put this trend line in as well. So guys, like that. So you could target it around there, but I think this area here is a bit high risk. I think it'd be a lot of buying and selling will happen there again around this area. So just do it to 775. That'd be your best bet there, and that'd be a fantastic trade. That's what I'll be looking for this week. Now getting on to euro dollar next. The euro dollar on the monthly chart is looking interesting now. So, and lots of investors and big money is now coming into this market. Notice how this volume now has picked up so much. It is greater than the volume when it fell down. Okay, guys. So for me personally, it looks as though we're now testing this triangle, this kind of triangle downward sloping trend line. And I do feel that we will get a pop up to the upside a bit more as well. Although I am short on this pair at the moment, looking at it, it's not going to be the greatest short position in the world. But we have tested 1.25. We did put a little mini double top on the daily chart. So I'm happy to hold it open for the moment to see what happens. But it's a chart of mixed feelings, and I think we're going to mess around for a bit. You're going to find a lot of market makers will stop hunt you if you're holding a bit more longer term. So just make sure that any trade you take on this euro dollar at the moment is perfectly to your execution, how you trade, your strategy, because any deviation from that, then you're going to, I think you'll be giving money away to the market quite easily here. And this would be a lot of fighting here at the moment, there will be. So this month is going to be the month where you're going to say yay or nay to the euro. If it breaks above into this area up here somewhere, you're looking very bullish. Obviously, a break and retest of 1.25 is very bullish. A move down to 1.195 wouldn't be unexpected, but doesn't confirm the bear trend at all. So be careful of that as well. So that's what I'm looking on the monthly chart. Coming down to the weeklies and dailies now on the euro dollar. Again, we've got this humongous high amount of volume here. With the bullish engulfing candle from last week, and then we've got above average testing the 1.25 again. So the deceleration is a valid deceleration, but it's not a valid sell signal just yet if you want a very, very safe trade. Now when you come down onto the daily chart, what you've got here now is this. You've got this nice high test here, then the volume drops off again. There's no real massive interest here per se at this present moment in time from the actual institutional investors. If I was to draw a trend line to say where this would be the ideal place to take a trade to, or what to look out for, it would be something along here. These two lows here like that would be very, very interesting to see what happens. And if you notice, that does mean that my chart is going to keep moving around the place. My mouse is having a little hissy fit today. There we are, it's a bit better. If you notice how that's where the daily 50 will be as well, this upward sloping trend line. So if you do take it short, I'll be looking for exit at the daily 50. 1.2 still gives good value for a bullish move anyway, because you could have a breakdown of this upward sloping trend line, then grind yourself way back up again. So, like I said, be careful. And this here will clearly be the market makers' payday for them. They want to take as much money as possible out of you. To show you the intraday chart as well on this one, I know I'm short on this. My 4-hour idea on this chart is we've got a double top pattern here, but it was only rejected with very, very little volume. And if you notice this candle here, it had very, very high volume, way above average. And if you just put this trend line in here like that, no matter how you draw this trend line, it's had a break and retest of the trend line, and it's moving to the upside again with volume. So for me personally, I think this may head higher, and that's me coming from a dollar bull at the moment. But I think it'll creep higher, stop people out, then it will plummet down a little bit to around about the 1.2 area overall, and then power back up again to test 1.25 at least a third time over the next couple of months or so. So don't be too surprised if you see the euro still not die off straight away. It's going to be a big fight here, it is. And I think if you just want to see what happens, just an example of what happens on this trade here, if you break and retest the 4-hour 50, you will clearly be on the bear trend. So if this actually breaks down like this, and I mean like this, put a clean lower low in, it has to put a lower low in, it then has to pull back to test, this area here, roughly round about here, where the 4 hour 50 come across, it'll just flatten out a little bit. That'd be a great sell trade as well. So they're the things on the euro dollar I'll be looking for if and when to take it short, if you're still waiting, because you should really still be waiting. Pound yen. So pound yen on the monthly chart is kind of decelerating in volume now. So what's happened here is this, is at the bottom of the chart here. Sorry guys, my mouse is very fussy today. So at the bottom of this chart here, volume picked up quite nicely, way above average volume, really nice. And as we got down to the monthly 50, volume's just dropped off dramatically. I mean, this is really dramatic volume. I know the candles are decelerated and this, that and the other, but that's just nothing there at all. To me, this is where, again, the market makers, they want to take this short. It looks like it'll be a little bit of a short position coming up. And I feel that it will move short, definitely down to 148, I'd feel. That's what it looks like. But on the monthly chart, you can just see the volume just nowhere near, way below average here. The average is the yellow line. This is where the volume is now. So it doesn't really make sense at the moment. There are a few anomalies there. Now, if we look at the dailies and weeklies now, let's go back to the weekly there. I had this zone in here. This is the 152 to 148 zone, and what's happened is the market has broken out to the upside. This is where my short idea comes from, and there's below average volume. So if you've got this huge area of resistance or interest and it breaks out with way below average volume, to me that breakout isn't actually validated. And again, if you just, I'm going to zoom up on these candles a bit more for you guys. If you just now look, this high test here had a fairly had volume that was this level here. This bullish engulfing candle had lower volume. That doesn't make sense. That really doesn't make no sense at all. So don't be surprised if you see a bearish week this week, purely because the weekly makes no sense either. So you've got low volume on the monthly, and the weekly is still moving up with even less volume, with bigger candles and less volume. I mean, the input and output doesn't make no sense. Now, I know when you look on the daily chart, 156 I had as a key level now, plotted that in. As you can see, it touched there, touched here, and we just zoom back a bit further, a couple more touches as well. So 156 is a key level. We have got an inside bar forming, but there's nothing to confirm that. So what I'm waiting for now really is another bearish candle to close down quite nicely, and that would confirm for me the next bear bit down. Now last week I did say about touching 152, which it did touch 152. We pop back to that chart as well now very briefly, and I said get 152.1. I said to get out. That was around about here. So if it never pulled back, unfortunately. It just carried on dropping down, but the idea was there. But like I said, if you look now, the bearish candles here, the volume's picking back up again on this 4-hour chart, and the bearish candles are now starting to move into play. So I'm not going to be too surprised if we start seeing some bearish formation happening. Now, if we do get, we might get a break and retest of this 1 hour 50. It's clearly broken, but we might get a retest of it. And as well, you just got to just play it by ears to see what's happening. So here's just one example. We can draw a trend line like that. We can say it's broken down to the downside. Any pullback here to make a lower high would be quite nice, just to see what actually happens. I look at the structure and go from there, really, guys. Now, the last chart is Bitcoin. Now, obviously, I'm not going to go into the monthlies of Bitcoin purely because it hasn't really got much there. But what I want you to notice is, again, volume and how it's broken down. So I did say a few weeks ago I'm looking to get about 6.3 to 8 to 6.3 it was to start with. That's where I think it'll go. It clearly got into the $8,000 level, so again, no surprise here whatsoever. I know some people, trust me, have been giving me some abuse online about how I'm wrong, but hey, we'll just keep doing this week by week to show people. What I want you to notice though is the volume's now decreasing a little bit. So you had this bearish engulfing candle here with high volume. You then got this next volume candle here, slightly lower than this one it was, but the volume's dropped off. And again, the volume is getting lower and lower again. So the interest here of shorting it is getting a little bit less and a little bit less. Again, I'm not surprised because we have reached the $8,000 mark, which I did outline about a month or so ago. Looking into the daily chart now, just to see what we've got. Personally, myself, I feel that we are going to actually have a pullback now, and the pullback will be roughly about it's more than 10,000, probably about $10,500, $10,600. So that's what we're going to be looking for there. If I then pop down to the intraday chart, I will show you what we're looking for. As you can see, the 1 hour has broken up nicely above the 1 hour 50 EMA, and that was caused again. If you look at volume here, you can see this candle here. The volume in this candle on the 1 hour chart here was huge volume there, and that really suggests that it didn't like the $8,000 level at all. So let's pop a line at $8,000 there, and if we zoom out, we should see something along the line later on. And as you can see, $8,000 been perfectly respected there. So the volume does add up there. It's changed its trend a little bit, and I'm now going to look where we can target next if you're going to start buying and selling this one. Personally, myself, you've got a level at 10,250, which I did highlight on the daily, around 10.5. So that level there looks quite interesting. 10.5 as well looks interesting. Put it as a zone actually, guys, just because that there is the next zone of interest. For me to turn around and say this is a bullish, it's going to turn bullish from here, you're going to have to break 10,500. If you then pop down to the 4 hour chart for that, 10,000 is actually where the 4 hour 50 EMA is, which we have in the past been respected and running down quite nicely. So as you can see here, my zone of yellow was perfectly highlighted. So I'm not again at all surprised. And now I'm just watching now. The volume now is picking back up. The candles are picking up. So there is buying interest in this market now. So don't be surprised for 10,000. The 4 hour 50 be tested. A test of that zone on the 1 hour chart of 10,250, and then we'll most likely head short again. But we just need to see what's going to happen. It may make a double bottom on the 4 hour chart at 8,300. Okay, guys, sorry it's a bit of a long one this week, but obviously the monthlies are here as well. And I hope you enjoyed it. Any questions, give me a shout. Take care.